Amazon is igniting the technology sector this morning, sending Nasdaq futures sharply higher after its cloud business delivered the strongest growth in more than 4 years. This is the United States pre-market update for Friday, July 31st, 2026, using market information verified at 9 o'clock Eastern Time. The overall market bias is cautiously bullish. At the final pre-market snapshot, S&P 500 futures were higher by approximately 0.5%. Dow futures were up around 0.6%. Nasdaq 100 futures were leading the market with a gain of roughly 1.3%. Russell 2000 futures were also modestly higher. Sentiment strengthened overnight, but the setup is not completely risk-on. Amazon's earnings are providing the strongest positive catalyst. Apple is moving sharply lower. Wage costs came in hotter than expected, Treasury yields are rising, and crude oil is also moving higher. The biggest story is Amazon. Amazon Web Services revenue increased 37% to $42.2 billion. That was the fastest AWS growth in 18 quarters and comfortably exceeded Wall Street expectations. Amazon also said its artificial intelligence and semiconductor businesses have each reached annual revenue run rates above $25 billion. Management increased its planned 2026 capital spending by 10% to approximately $220 billion. Chief Executive Andy Jassy said demand remains so strong that Amazon still does not have enough computing capacity to satisfy every customer. Much of the company's planned cloud capacity for 2027 has already been reserved. Amazon's AWS contract backlog rose to $496 billion, up from $364 billion in the previous quarter. The stock is up approximately 11.3% before the bell, trading near $262, with almost 7 million shares already changing hands. The results are supporting NVIDIA, Micron, Intel, AMD, Marvell, Monolithic Power Systems, and other artificial intelligence infrastructure names. The second major development is the Employment Cost Index. Labor costs rose 0.9% during the second quarter. Economists expected an increase of 0.8%. Wages and salaries increased 0.9%, while benefit costs rose 1%. Total compensation costs were up 3.4% from 1 year ago. The report is not an inflation crisis, but it shows that wage pressure remains firm. Treasury yields moved higher after the release because persistent labor costs could give the Federal Reserve less flexibility to reduce interest rates. The 10-year Treasury yield is near 4.69%. Higher yields are a risk for expensive technology shares because they reduce the present value investors place on future earnings. The third major story is Apple. Apple reported earnings of $2.02 per share. Wall Street expected approximately $1.89. Revenue rose 16% to roughly $109.4 billion. iPhone revenue increased more than 21%, and Mac sales rose almost 29%. However, Apple's services business generated approximately $30.7 billion, below the $31.4 billion analysts expected. Management also warned that advanced chip shortages are limiting production. Apple projected September quarter revenue growth of between 9 and 11%. Wall Street was looking for approximately 12%. The stock is down about 8.6% before the bell, trading near $305 with almost 6 million shares traded. That creates an unusual split inside the technology sector. Amazon and artificial intelligence infrastructure stocks are leading higher, while Apple is acting as a major drag on the indexes. Semiconductor shares are showing broad strength. Monolithic Power Systems is up more than 12% after reporting record quarterly revenue of approximately $981 million. Demand for power management products used in artificial intelligence servers remains strong. Marvell is up approximately 8.6%. Micron is higher by more than 5%. Intel is up around 5%. AMD is gaining roughly 4.5%. Super microcomputer is up more than 3%, and NVIDIA is higher by approximately 1.8%. This rebound is encouraging, but traders should remember that several of these stocks have experienced extreme volatility during the past 2 weeks. Outside technology, Newell Brands is up almost 29% after beating profit expectations and increasing its full-year outlook. On the downside, Roblox is falling approximately 19%. The company's third-quarter bookings forecast came in below Wall Street expectations. Management said changes to its recommendation algorithm and new child safety measures are reducing short-term monetization. GoDaddy is down more than 22% after narrowing its forecast and reporting slower adoption of its artificial intelligence products. Cross-market signals remain mixed. West Texas Intermediate crude is near $84.77, up approximately 1.4%. The stronger oil price supports energy stocks, but adds another layer of inflation risk. The dollar index is near 100.13 and slightly higher. Gold is down approximately 1% near $4,110 an ounce. Bitcoin is trading near $63,900 and is lower by more than 1%. Volatility futures are down sharply, suggesting investors expect less broad market turbulence. However, lower volatility does not remove the risk created by large earnings gaps and rising Treasury yields. The next scheduled economic event is the Chicago Purchasing Managers Index at 9:45 Eastern Time. Economists expect a reading near 55, compared with 56.7 previously. The final University of Michigan Consumer Sentiment Report follows at 10 o'clock Eastern Time. 3 stocks deserve the closest attention. The first is Amazon. It is the primary driver of Nasdaq futures and has the strongest combination of a confirmed catalyst, heavy volume, and index influence. The key question is whether the stock can hold its opening range after an 11% gap. The second is Apple. It is a major index weight, moving sharply against the broader market. Watch whether the stock stabilizes near its pre-market level or continues making new lows after the opening bell. The third is Monolithic Power Systems. Its earnings gap is a direct test of demand for artificial intelligence power infrastructure. Early volume is lighter than Amazon or Apple, so the stock could experience wide price swings. The biggest market risk is that stronger wage costs push Treasury yields higher and cause the Amazon-led technology rally to reverse. The strongest market catalyst is Amazon's 37% AWS growth and evidence that artificial intelligence investment is creating accelerating cloud demand. The opening strategy is to remain patient. Mark the pre-market high and low. Let the first 5 to 15 minutes establish direction. Watch Treasury yields and semiconductor breadth. Use smaller positions around large earnings gaps. Define the entry, stop loss, profit target, and maximum daily loss before entering. Do not chase Amazon simply because it is up sharply. Do not assume Apple must immediately rebound simply because it is down sharply. This is market before the bell. Trade with a plan, control your risk, and never chase the opening move.